Hi, my name is Marc Belaiche. I'm president of TorontoEntrepreneurs.ca. Thanks for watching. In this segment, I'm actually joined by Melanie Russell, president of Kalex Valuations. Thanks very much for being on today, Melanie.
Thanks for asking me to join, Marc.
No problem. So maybe you can talk a little bit about your background first before we have one topic that we're going to cover, but maybe you can talk about a little bit about your background first, and then we'll cover the topic.
Okay, so I practice in the area of valuations, asset and business valuations. My background is accounting, CPA, legacy CA. So we focus on valuing businesses for various purposes, whether it's dispute scenarios, trying to sell your business, trying to transition it to another generation, or to employees, or marriage disputes, things like that.
Okay, great. So what can a business owner do now to improve their chances of selling their business in the future?
That's a great question. I think in general, pretty well the same as always in pre-pandemic times, but everyone has the luxury, unfortunately or fortunately, of time. So above everything else, I would say that be patient. Don't let the panic take you over and say, I've got to sell. So unless you have no choice but to sell, hold on and ride it out and wait. Because if you panic and have to sell right away, then you're going to get less than otherwise. That's just what's going to happen. Mm-hmm. But take the time, take this opportunity, however much time is left before things get back to some level of normality, to clean things up. So get important agreements in place, whether it's with your key customers, your key employees, leases, intellectual property arrangements, shareholders agreements if you don't have them. Purchasers always prefer certainty of written versus oral agreements. And the more certain things are, in general, the higher price will be paid. Solidify your customer relationships and consider cleaning up unprofitable customers. Get proper accounting and reporting systems in place. Really important, because purchasers will come in, they'll ask for financial documentation, and if you can't provide it, or you can't provide it easily, then that's going to be a big challenge to even get over the hurdle of getting a deal closed. Anticipate the diligence requests that will come from potential purchasers, and if your systems aren't ready for them, don't waste anyone's time. Just clean it up first, and then get ready to sell. Clean up complex and unnecessarily crazy organization structures. If you aren't sure why there are some companies or entities within your corporate structure, get rid of them, close them down, talk to your accountant to just deal with it. Eliminate related party and non-market transactions. That's a big trigger for potential purchasers. Just reduce the number of normalization adjustments to argue about on diligence and closing. And this will increase your chances of selling shares rather than assets. So ending up with a higher net amount in your pocket after selling your company rather than a lower amount. Clean up contingent liabilities, whether they're lawsuits, whether they're warranties, whatever it is. And consider having your accountant increase the level of assurance on the financial statements. If you now have notice to reader statements, consider going to review engagement. It just provides a potential purchaser with more confidence in your accounting records. And one thing that is different, though, all of those comments I just said are standard for any time, but something really important with these times is to make sure you get a plan to deal with COVID, coming out of COVID, how you're going to deal with it. Be able to show to those potential purchasers that you thought through all the issues, you've got it covered, you know where you're going. You may not know perfectly where you're going, but you'll have ideas of where you're going, and you're dealing with the potential fallout of what's happened and will be happening. And of course, talk to your professionals, your accountants, lawyers, etc., about various opportunities for the business. So one example might be freezing the company, taking opportunity of what may be lower values during these days. As I talked about in our last session, not all companies' values will have gone down, but some will have. So it might be a good time to freeze your shares and transfer some of the growth to another generation, to your employees, etc. And always, this is a comment all the time, consider why you're thinking about selling. So do you really want to sell? It's always good to go through that and understand what is going to happen if you do sell, If you do sell, your baby will be gone. And what are you going to do after you sell? Where are you going to get, what are you going to do? Where are you going to spend your time? Do you have someone that can invest your money properly so you'll be getting some return? Are you going to try to look for a job? Do you have great hobbies that you want to take up? Do you want to travel? Well, travel in a while, not now. So really think about that, because it's easy to think day to day, you're in a grind, you have to call customers, you have to worry about what money comes in, how are you going to deal with, how are you dealing with employees, all issues. But once you're out of there, then what's going to use up your time, both physically and mentally. A couple other things I would also suggest is start doing some of the due diligence that you expect a potential purchaser would. And if you're not sure, talk to your accountants, talk to an M&A advisor, talk to your lawyers about the kind of things that potential purchasers would look for and would want. If you can close some of those holes or issues, deal with those issues up front, it'll make a sale process ultimately much easier. And spend your time thinking about how you would want to structure a transaction. So do you have a minimum price? I've had lots of clients over the years who ask me to value the business, I value it, and they say, well, I don't really care what you valued it, because if someone's not going to pay me X, I'm not going to sell it, because I need X to retire, or I need X to start my next business, I need X to buy a piece of property, whatever it is. So get an idea of what you would be willing to accept. Maybe talk to a evaluator and see if that's reasonable. If it's not, then maybe you clean things up and look to selling later on. Think about whether you want to stay on as a shareholder. And if so, how much equity would you be willing to retain, or do you want to retain? Do you want to stay on as an employee? You want management contracts? An important thing especially for entrepreneurs to think about is, can they work for someone else? It's easy to think that yeah, I'll sell my business and then I'll work and get a couple $100,000 a year, a great contract, and I don't have any stress of running the business. But can you actually really report to someone else? That's an important issue. Be realistic about that. And what type of remuneration would you require to stay on? And are you willing to sign non-compete, non-solicitation clauses, which are usually mandatory? And then, of course, last suggestion, bring on the right professionals, whether it's evaluators, M&A advisors, accountants, lawyers, and get the information you need. Find out the important things, like how much lifetime capital gains deduction do I have available, if any? Or what might that do to me on a sale? What benefit or no benefit will it provide? I have a client right now who we assumed had a lifetime capital gains exemption available, and found out they did, but the company did not qualify for that. So to sell, they were going to lose $850,000 roughly of tax-free money. But had some planning gone in ahead of time, they could have saved $850,000 effectively. And the evaluators, if you do engage a evaluator, they'll help you understand what you may receive if you try to sell the business, and ways to potentially maximize what price or value you get. And that will help you with your decision to sell or not. And an M&A advisor can walk you through the process, prepare certain information for potential purchasers, determine the appropriate selling process, negotiate the transaction, etc. So that's a few of the comments that I would make on that process.
That's great. Thanks for sharing your experience and expertise with the viewers. Melanie, how can someone get hold of you then?
You can reach me either by phone at area code 416-488-9590, extension 225, or my email, Melanie, M-E-L-A-N-I-E, at kalexvaluations.com, and that's KALEX-VALUATIONS.
Great. And of course, through LinkedIn too.
Oh, yes, of course, through LinkedIn. Just search Melanie Russell. You'll probably find me.
Excellent. Okay. Well, thanks so much again. Thanks for joining me, Melanie. My name is Marc Belaiche. I'm president of TorontoEntrepreneurs.ca. I want to thank you for watching, and feel free to connect with me as well through LinkedIn. And if there's anything I can help you out with, and check out our website at TorontoEntrepreneurs.ca for information as to upcoming events as well. Thanks a lot. Have a great day. Take care.